9 Mysteries to Building Client Commitment in Banking. Client commitment cannot be accomplished in a day, week, or a month. The groundwork of a relationship incorporates trust, discourse, a consistent development in help possession, and a development in portion of wallet whenever done accurately. The option in contrast to zeroing in on building client commitment is a relationship that doesn't meet its maximum capacity or client steady loss. As per Gallup research entitled The Monetary and Profound Advantages of Completely Drawn-in Bank Clients, the unmistakable advantages of a completely connected with client that is both attitudinally faithful and genuinely joined to the bank incorporate the accompanying expanded incomes, wallet offer, and item entrance. Clients who are completely drawn in bring $402 in extra income each year to their essential bank contrasted, and the people who are effectively separated, 10% more prominent wallet share in store adjusts and 14% more prominent wallet share in speculations. Completely drew in clients likewise normal 1.14 extra item classes with their essential bank than do clients who are effectively separated. Commitment items Gallup. More prominent by expectation and thought, a drew-in client not just holds more records at their essential bank, they additionally shift focus over to that equivalent bank while thinking about future necessities. When such a large amount the shopping system is done web-based, working on your bank's possibilities being in the client's thought set is significant. Commitment record opening. 1. Further develop securing focusing on. Client commitment starts before another client even opens a record. With the present profundity of information and handling capacity, it is feasible to find new possibilities that are like the best clients who as of now have accounts at a monetary foundation. By building obtaining models that glance at item use, monetary way of behaving, and relationship productivity, opening records that have restricted potential for commitment or development is diminished. Past segment monetary way of behaving and item use demonstrating geographic displaying is additionally significant since the most grounded potential exchange regions are not generally obviously characterized by branch range planning. 2. Change the discussion. One of the vital components of building a drew-in client relationship starts with the discussion during the underlying record opening cycle. To fabricate trust, the discussion should zero in on ensuring the client accepts that you are really keen on getting to know them, will pay special attention to them, and that after some time you will compensate them for their business/reliability. This early discussion needs to zero in additional on catching knowledge from the client and talking about the worth various items and administrations will have according to the client point of view rather than just examining highlights. The objective is to show to the client that the items and administrations being sold will meet their extraordinary monetary and non-monetary necessities. A portion of the understanding that ought to be gathered, past the fundamentals, incorporates monetary goals. Essential monetary leader in the family, it is in many cases the spouse. Correspondence channel preferences. Accounts held somewhere else, balance subtleties are not generally so significant as knowing the classification. Tragically, research studies show that most of branch workforce experience issues having top-to-bottom discussions with clients around needs and the worth of an association's administrations. As such, having a solid handle of item information is presently sufficiently not. The underlying spotlight ought to likewise be on deal's quality instead of deal's amount. Strangely, a few monetary organizations have started using iPads to gather knowledge straightforwardly from the client. While appearing to be less private, an iPad new record survey normalizes the assortment cycle and generally can gather undeniably more private data than the bank or credit association worker is open to gathering. Webinar register for this free online class. The Advanced Quandary: Banking's Development versus Change Challenge. In our current reality where digitization is presently not an extravagance however a need, we investigate the sensitive harmony among development and change in our select online course. Wednesday, January 24th at 2 p.m. ET. Enter your corporate email address. Email address. Register now. 3. Convey early and frequently. It is fascinating how banks and credit associations set goals for extending a client relationship and commitment and afterward lay out inconsistent guidelines around correspondence recurrence and rhythm. It is entirely expected for a bank to restrict the quantity of contacts to 1 per month or less regardless of the way that another client has been displayed to want essentially more connection as a component of their new relationship. Research from J.D. As a matter of fact, Power has found that the ideal number of correspondence messages during the initial multi-day time frame from both a consumer loyalty and relationship development point of view is 7 contacts across different correspondence channels. An illustration of an onboarding commitment interchanges plan is displayed beneath. The contacts underneath do exclude extra media, for example, on the web and portable financial informing, ATM informing, advanced retargeting, and so on. It is essential to recollect that in any event, a commitment correspondences plan ought to incorporate a thank you message inside the initial 5 days of the record opening, from either as new or existing client. Focus messages sent email mobile. Day 1 welcome and activation welcome unit. Pre-approved offer email capture mobile catch. Day 2 thank you welcome email welcome text. Day 5 utilization new record follow-up. Go with administration discussion alert notice. Sign up alert notice. Text. Days 7 to 30 utilization and engagement branch telephone registration. Commitment letter engagement email. Direct store / online bill pay engagement text. Direct store. Days 30 to 60 utilization and engagement branch. Commitment call day 30. Commitment email. Day 45. Usage email engagement text. Portable store. Days 60 to 90 engagement. And cross-sell call center. Relationship expansion modeled commitment. Administration email engagement text. Rewards offer. Days 90 to 180 cross-sell call center. Relationship expansions modeled administration. Cross-sell modeled administration. Strategically pitch.